not a fool. No, you're not fooling anyone. Oh, but when you're gone, when you're gone, when you're gone, oh, baby, all the lights go out. Thinking of that, baby, I was wrong. I was wrong. I was wrong. Come back to me, baby, we can work this out.
Good morning. Hope you're all well. My name's James Eadie. I'm the Acting State Manager and Account Director in Victoria. Welcome to our Victorian Developer Property Market Update. Shortly, Cameron Kusher, our Executive Manager for Economic Research, will give a property market update. If you have any questions along the way, please use the functionality at the bottom of the screen, and I can ask these questions for you after his presentation. If we don't get to all of the questions, the team will follow up with you individually afterwards. So, no further ado, over to Cameron.
Thanks, James. Thanks everyone for coming. I'm just going to share my screen and we'll jump into the presentation. Press the wrong button. All right, so I'm going to give you a bit of a Victorian housing market update. Then at the end, I'll pull in some of the developer-specific data that we're seeing, but I'll give you a bit of a good rundown of what we're seeing. Obviously, there's some challenges at the moment. Very hard to transact property during stage 4 lockdowns. I think the good news is, though, that even before we went back into lockdown in Victoria, we were seeing some positive signs in the market. And I think as Victoria comes out of lockdown, there's no reason to expect that we can't see those positive signs again. So to start with, what I'm looking at here is searches for properties for sale on the general for sale section of the realestate.com.au website. And I think this is important because it does highlight where most of the activity on our website goes, but it also highlights interest in property more broadly. And you can see in Victoria, what happened in March. There was a big fall away in search activity as lockdowns went into place. Search volumes from the announcement of the lockdown fell for 3 weeks. You can then see that they rebounded very rapidly, are up 20% almost that first week. And there was quite strong growth through April, right the way to June. Then things have been a little bit more volatile through June and July. And obviously then there was the second lockdown of Victoria. Probably encouraging is that the decline was swift, but we didn't see it run for as many weeks in terms of search activity as we saw during that first lockdown. And you can now see that over the past couple of weeks, search volumes have actually picked up. So as people are settling into lockdown, as they're getting really, really sick of their home and wanting to move, they're starting to look a little bit more at properties for sale. And I think also as lockdowns hopefully near their end in the next 3 weeks, people are starting to think about whether or not they want to stay where they currently are. You can see on the year-on-year basis, despite all of the drama that we've seen over the last few months, in terms of search volumes, they're still significantly higher than they were at the same time last year. And you can see that here. So Victoria's obviously been impacted by those shutdowns, and search volumes are down 13.5% from where they were at their peak. You can see most other states outside of Western Australia have actually seen search volumes pretty much return back to where they were at their recent highs. What we're actually seeing in Western Australia is a lot of traffic going to new homes because of home builder and because of additional state government stimulus. And then if you look on a year-on-year basis, search volumes are still up almost 17% in Victoria from where they were 12 months ago, which is the lowest of any state and territory. But when you consider Victoria is the only state that's had 2 lockdowns, it's still a pretty strong result for the market. The rental market, and I'm not going to touch too much on the rental market, but I think particularly from a new housing perspective, we know that that rents are an important part of that. We know that a lot of new homes are purchased by investors and end up in the rental pool. And rental demand is actually holding up, not just in Victoria, but right across the country pretty well. When you consider what's happened to the rental market, firstly, you've got closed international borders, so we've got no students migrating to Australia. We've got no people coming to Australia permanently for work, and clearly that's a big source of demand for rental accommodation when people first arrive. But you've also got home builder, which is being very effective for the particularly land estates, and I'll go into that a little bit later, but it's also dragging demand out of the rental market and into the home ownership market. But we're still seeing rental search volumes in Victoria and right across the country quite strong. And what I suspect is happening is people that are already renting are monitoring the market very closely to see what else is becoming available, what price it's at. I think they know that overall demand is going to be reduced, so they're going to be keeping a close eye on what becomes available. I also suspect that landlords are doing a similar thing, looking at what the competition looks like, what price is the competition coming onto the market, because they are going to be very keen to try and keep a hold of those renters that they already have, or if they lose a rent, attract someone new to their property. So you can see over the last couple of weeks, again, rental searches in Victoria have started to pick up, and they are still marginally higher than they were a year ago. Rental searches have dropped by 18.5% from their peak, which is the largest of any state, but not that much larger than what we're seeing in Queensland and South Australia. And then year on year, you can see it is up 3.5%. So there is still more interest in the rental market in terms of search volumes than what we saw at the same time last year. As I said, there were pretty positive signs in the Victorian market coming out of the first wave of lockdowns. And again, this is something that we've been seeing right across the country. You can see from about the 24th week of this year up to the week before last, sales volumes are actually higher than at the same time last year. Now, keep in mind, last year wasn't a particularly strong year for sales, but it's still a good sign that the market was on a recovery trajectory. So this is actually looking at the number of properties that are listed in our for sale section and moved to our sold section each week. You can see that it has just dipped below where it was last year in the most recent week. But you can also see it never actually fell away as dramatically as we probably expected during that first wave of lockdowns. There's probably also a bit of a lagged effect here. People generally aren't going to move a property from being available for sale to sold until at least it's gone unconditional. But again, you can see that there were really positive signs coming out of lockdown in Victoria, that transactions were occurring at a reasonable clip. And if we look across each of the states, you can see that trend's really replicated. The red bars there are showing the yearly change. So looking at last week compared to the same week last year. And you can see that Victoria is actually the only state where volumes were down on last year, down 8.4%. Now, everywhere else, quite strong momentum, up more than 20% in most states from 12 months ago. But particularly look at some of the larger states like New South Wales, Queensland and WA, seeing very strong volumes of sales compared to the same time last year. The other market that's done really well is the vacant land market. So again, since Home Builder was announced, you can see this huge lift in vacant land sales. And again, this is not someone buying vacant land going to a developer site. This is someone purchasing vacant land which is just listed for sale. So it could be residual developer stock. We know that a lot of developers, once they get to the end of their project, will just advertise on the for sale section of the site. And you can see that Home Builder has really driven vacant land sales much higher over that period. And it actually tipped higher last week. So volumes are still much higher than they were 12 months ago in terms of vacant land sales. Moving on to demand, and one of the things we've started to look at is this concept of demand. And what we do when we look at talking about demand is we look at the characteristics people do when they're looking at properties. So, for example, we put it into a number of different buckets: low demand, medium demand, and high demand. And our demand index is tracking people that are showing these high demand characteristics. So the characteristics of someone with high demand would be, for example, that they flick through all the photos of a property, and then they keep coming back. So they might come back 2 days later, look through everything, come back another 2 days later, look through everything. They might email off an inquiry to a real estate agent. They might save the inspection time. They might save it. They might email it to a friend. That's high engagement. On the other side of things, low engagement is someone that might just look through 3 photos and then move on. So again, what you can see is a big fall away in demand during March and early April, a really strong rebound like what we saw with search volumes. And then you can see that demand has really dropped away quite a lot over the last little while, but it hasn't dropped to anywhere near the depths that we saw during the first lockdown. So I think that first lockdown, a lot of uncertainty. I mean, case numbers were much lower, but we also weren't sure how long lockdowns were going to be, how infectious this thing is. We know a lot more about COVID now than we did that first time around. And I think also, to some degree, there's a bit of a light at the end of the tunnel here. We know that there's a six-week period. We can obviously see now that case numbers are coming down as well. So demand's still dropping, but it is much higher than it was during that first lockdown, and it's still higher than it was 12 months ago. And if we look at that, it's only marginally higher than a year ago. It's up 1.8%, and demand index has fallen by 28.7% from its peak, which is a much larger fall than we've seen anywhere else. But again, take into consideration what's happening in the other states and territories where lockdown isn't happening. New South Wales is barely lower than where it was at its peak. Queensland search volumes are back up to their peak, and most states are at their peak, if not close to it. And even if you look at the year-on-year changes, sure, Victoria's only seen a 1.8% increase, but the other markets where things are able to operate more normally, people are out of their homes, we're seeing big increases in demand for property. And I think to some degree, what's really being underestimated in a lot of the commentary around the property market is the fact that interest rates are the lowest they've ever been. You can go and get a fixed rate mortgage if you've got a reasonable size deposit, 3-year fixed for 2.25%. That's very, very cheap. And we do also know that historically lower interest rates lead to increased demand for housing. And we're certainly seeing that outside of Victoria at the moment. And again, once Victoria starts to come out of lockdowns, I think we'll start to see that again. In terms of another way to look at the market is what's happening with views per listing. And you can see in terms of the number of properties listed for sale, on average, Victoria's generally been seeing a high number of views for those listings. Tasmania really the only state where we're seeing a higher number of views per listing. So for any listing on our for sale section of our site, there's about 1,500 views for that listing in Victoria. And views per listing are actually 9.3% higher now than they were in February, which was, when things were actually quite normal before we went into that first lockdown. And views per listing are still up 25.8% from where they were 12 months ago. So there's still a lot of interest in residential property. And if we look at where views per listing is strongest in terms of the number of views per listing, the outer east of Melbourne and the Mornington Peninsula are seeing the highest number of views per listing. Melbourne's west is seeing the lowest number of views per listing, but 1,000 views per listing in Melbourne West is still better than places like Brisbane, places like Perth, places like Darwin as well. And then if we look at where the growth is, overwhelmingly we're seeing really strong growth in views per listing over the last 12 months in the Mornington Peninsula. And in particular, since the low in May, there has been a really strong rebound in the Mornington Peninsula. So, there's all this talk about people moving to regional areas of the country. Lifestyle markets like Mornington Peninsula do start to become a lot more attractive for people in Melbourne if they don't have to go into the office every single day of the week. But on the flip side of that, have a look at the inner east. Views per listing in the inner east are only up 0.9% over the last 12 months. And some of the inner areas haven't seen overly strong growth in views per listing. And then regional Victoria, again, generally views per listing are much lower, but Geelong has the highest number, followed by Ballarat and Bendigo. And then look at the growth over the last 12 months though. Geelong's actually been the laggard in terms of growth in views per listing. The standout's been Warrnambool in the southwest, followed by the Northwest, Latrobe, Gippsland, and some of the other areas there, obviously coming off a very low base though. And then the rental market, again, as I said earlier, I haven't touched too much on the rental market, but I do think it's important to give it some consideration, given that, particularly in the new development section, a lot of properties are purchased by investors and do end up in the rental pool. Victoria has relatively low numbers of views per listings for rental properties. If we break that down, you can see just over 1,000 views per listing. But views per listing for rental properties are down 19% from where they were in February, and are down 31.5% from where they were a year ago. So there's definitely a bit of a challenge in Victoria. And when you consider how many overseas students come to Victoria, Victoria has also been very successful over recent times of attracting people from other states and territories to Victoria for jobs. So that's obviously ceased while the domestic borders are shut. So that's definitely a challenge for the rental market at this point. And then again, if we look at the areas where we're seeing the number of views per rental listing and the change, the inner city suburbs are really being impacted by this. The Melbourne's inner has seen a 52.2% reduction in views per rental listing. The inner east, the inner south, obviously seen large falls as well. But again, you can see Mornington Peninsula is a very interesting one. Maybe suggesting that whilst people might be wanting to move to Mornington Peninsula, they're thinking about going and renting there for the next 6 to 12 months to try it out and see how it goes. Views per listing are up 71% from where they were 12 months ago. And the outer east is kind of a bit more of a lifestyle area as well. And it's the only region of Victoria where views per rental listing have increased outside of Mornington Peninsula, up 16.7%. And then in regional Victoria, it's really a bit more mixed. The Geelong seeing the greatest views per listing, but the growth is not particularly strong, followed by Bendigo, and it's a similar story. You can see that there's actually growth in the Hume, strong growth in Hume and Latrobe Gippsland in terms of views per listing over the last 12 months. So in terms of prices, again, I think one of the things we need to consider is when interest rates come down, demand for property usually increases, and interest rates were coming down over the last 12 to 18 months. They weren't down as low as they are currently. And that was certainly starting to drive a recovery in the housing market. On an annual basis, you can see that the last few months is starting to impact on the Melbourne housing market and dwelling prices. The annual rate of growth is starting to slow, and there have been some price falls more recently. But I think the main point here is that we went into COVID with some good momentum in the market. And I think, if things can get back under control in Melbourne and Victoria and stay under control, there's no reason why we can't see that continued momentum, particularly with home builder stimulus and potentially some further housing market stimulus coming down the track as well. So if we look at Victoria and we look at Melbourne on the left, and then some of the larger regional markets on the right, in terms of the black charts, the black bars show the quarterly change in prices. The red year on year. So you can see everywhere is still higher year on year, but you can see over the 3 months to July, particularly in those inner city markets, some weakness becoming evident in there. In fact, the northeast and the Mornington Peninsula regions are the only areas of Melbourne that continue to see growth over the last 3 months. Bit of a different story in regional Victoria though. Still seeing growth in prices. Geelong's definitely slowed, but have a look at Bendigo, Ballarat and Latrobe Gippsland. And again, I think this is one of the phenomenon we're seeing. People talk about everyone, looking to move outside of the capital cities. The reality is, I think when people do that, and we'll see if it actually happens, I still think there's going to be an expectation that they do come into the office, 1 or 2 days a week. So you still want to be reasonably close to the city. And really, I think that highlights places like Geelong, Bendigo and Ballarat. You can jump on the train and get into the city. Latrobe, Gippsland, parts of that region, you can definitely get into the city, although you have to be a little bit choosy as to where you live. But I think those are the kind of markets where things will actually see more demand coming out of this. So turning to what's happening in the developer space and specifically looking at some of the data that we're finding here. So this is looking at the year-on-year change in developer page views. And you can see that there's clearly been a big uptick in people coming to our new home section and looking at development sites, both land estates and apartments. You can also see that there has been a big jump in developer page views for land estates since Home Builder started, but it actually predated Home Builder. We were seeing a ramp up in both page views and inquiries before the Home Builder package was ever announced by the government. And again, I think that really highlights the low interest rates and also the fact that there isn't a lot of investor activity in the market. First home buyers are looking to capitalise both now on Home Builder, but also the individual state-based incentives that are in place for first home builders to go and build new properties. The feedback we're getting, and I'm sure you're probably aware of this on the call, is that Home Builder is much more effective for the house and land market than the apartment market. And we're not seeing anywhere near the same level of demand for apartments. But in terms of page views, they're still much higher than they were 12 months ago. In terms of inquiries, though, it's a bit of a different story. You can see there's been an absolute rush in terms of land estate inquiries in Victoria. Now, it did come back over July, but you look at that number, it's still 200% higher than it was 12 months ago. It's just that it was almost 700% higher than 12 months ago in June. So Home Builder has been very effective for the land market, but it's really not providing anything much for the apartment sector. And you can see that inquiries in July were actually slightly lower than they were 12 months ago. And if we look at where the inquiry is going, you can see a fairly dramatic change in terms of what's happening with inquiries. So historically, going back to 2015, which is basically as long as we've got this data available, apartments have been the sector that have seen the largest share of the overall inquiry, while land estates not so much. And then you can see over the last 3 or 4 months, there's been this sharp drop in apartment inquiries and a big jump in land estate inquiries. But again, keep in mind that this rebound in land estate inquiries actually started before Home Builder was ever announced. It started creeping higher in April, and then it jumped quite a bit in May. And then June and July, since the announcement of Home Builder, has just seen more and more inquiry going to the land estate. And again, I think once we come out of lockdowns, there's going to be some really strong demand. Whilst you can obviously buy a piece of land without necessarily having to go and see it, I think that quite a few people will be holding off, probably doing their research, going to the builder side of our website, getting an idea of the type of home they want, and then those inquiries will be flowing into the developers' inbox once we come out of lockdown. So just a final couple of slides, and I think it's really important to touch on. Consumer confidence is obviously a really vital part of people's preparedness to go out and spend money, whether that be just in shops on general things, or whether that be to go and buy a property, which for most people is the biggest expenditure they'll ever have, is when they buy properties. And what we can see with consumer confidence is that it was dropping even before we went into COVID. You can see really since the announcement of the 2018 budget, which they've got there, the trend in consumer confidence has been reducing. At the start of the year, we had the bushfires, and that led to a drop in confidence. And then COVID hit, we went into lockdown, and we saw consumer confidence slump to its lowest ever level. And they actually have this data all the way back to 1974. It's never been lower. But by the time we got to sort of June, July, there was a pretty strong recovery in consumer confidence happening. If you told me in March that confidence would be back above levels we saw during the depths of the GFC and nearing on 100 points, I would have been very surprised. Unfortunately, that was fairly short-lived. And as Victoria's COVID cases started to increase and Victoria obviously went back down into lockdown, we did see consumer confidence nationally really drag down. I think there was just this sense of doom that, what's happening in Victoria is going to happen in New South Wales and Queensland. And luckily to date, and touch wood, it remains that case. We haven't seen that, but it's really dented confidence right across the country. the good news is that consumer confidence has increased now for 2 consecutive weeks. It's still very low. It's still very much at recessionary levels. But given how quickly it rebounded the first time, it does give me hope that it can rebound quite quickly the second time as well, especially as those case numbers continue to fall and then eventually Victoria starts to open back up again and people go back to businesses. And talking about businesses, we can see when we look at business confidence and business conditions, again, very much that V-shaped recovery, a big fall away in March and April, and then a rebound. The only thing I'll say about this is this latest data was taken before Victoria went back into stage 4 lockdown. So we're probably going to see a slump in, further slump in business and a slump in business conditions when we get the next data set. But again, I think if we can open things back up again as per the plan, then business confidence and business conditions will be in a position where they can recover pretty quickly. And that's obviously vital when we consider that, you know, the Reserve Bank and Federal Treasury is saying that the unemployment rate's going to hit 10%. Getting the economy back up and running in a safe way is really going to be vital, because if people are employed, you know, they're still probably not going to be able to travel overseas. They're still probably not going to be able to spend money like they used to, but it will certainly help the economy. And a lot of that could actually then flow into housing. If people are restricted on their ability to go, you know, on that holiday to Europe or the US and spend $15,000 or $20,000 when they do that, they might stay at home and think about doing a renovation to their property, or they might think about going and building a new property. So confidence is really vital for the market. And that's really my last slide. I guess in terms of the developer sector, I think, as I've said, that there's been certainly some very positive signs for land estates on the back of home builder, but very little for the apartment sector. I think for me, the biggest question remains what's going to happen in 2021. I know the Victorian government's extended home builder for another 3 months. But in 2021, if the international borders remain shut, and Qantas said they don't expect international travel to restart until mid next year, if the international borders remain shut, that is going to be a big challenge for the new housing sector, because we know that big sources of demand for new housing are people that have arrived in Australia and aren't yet citizens, and therefore generally have to buy brand new homes. So I think the best thing we can really do is keep talking about that. The more we talk about it, the more, you know, governments become aware of it, and the more pressure, I guess, mounts on governments to actually, you know, dive into their pockets and start looking at other stimulus measures for the housing sector. So that's it from me. I'm going to hand you back to James, but just before we do that, I'm going to flash up a poll, and we'd love you to answer the questions on that poll if you could. Thank you very much.
Thanks very much, Cameron. A copy of today's recording will be available on the Development Hub. So if you'd like to go and have another look at that, that would be great. Alternatively, you can reach out to any of our account managers that can help you out with any data or insights that you might need. Cam, I've got a few questions from the audience. Firstly, do you think JobKeeper stopping will have a negative impact on the real estate market?
Yes, it will. I mean, it's all going to depend. JobKeeper's been expanded out for some businesses longer. But, you know, we are in the first recession we've been in 30 years. The fact of the matter is some businesses aren't going to come back. Businesses are going to be looking to cut costs, and that for most of them means a reduction in headcount. So when JobKeeper does get removed permanently in some form or the other, that is going to create some challenges for the broader economy. And I think that's why, you know, federal government's so desperate for domestic borders to open back up. You know, they're very keen to, you know, we heard the New South Wales government say that they didn't want to go back into lockdown like Victoria did, because they know that it is to the detriment of jobs and the economy. So, you know, we've gone through this pretty well to date, but the reality is some of the fallout of this recession is going to be felt over the next few years, particularly as that stimulus is wound out of the market. That's why it's so important that we minimise the impact, but also that we get that unemployment rate coming down as quickly as we can.
Yeah, sure. Long-term market, long-term outlook on the market, 1 to 3 years. Thoughts?
Yeah, I guess as I kind of touched on, I think for the land, it's very different markets at the moment. The new market's really challenged, I feel, and unless there's some sort of stimulus for it, I think it's going to continue to be challenged over the next little while, at least until international borders are opened back up again. In terms of the land market, I think the next 6 months is going to be really strong. There's a lot of pent-up demand out there. There's a lot of good reasons to go and build a new home rather than maybe buying an established home. But again, 2021, I think, does look like a bit of a challenge at the moment unless there's some form of additional stimulus coming in. And hopefully we can get that both from the Victorian state government and maybe from the federal government as well, because it's not just, developers, it's subcontractors, it's builders. We want to keep these people in work and we want to find ways to do that. I also think going back to the apartment market, one of the challenges is just the magnitude of construction that has gone on over the last 5-6 years in Melbourne. It was already pulling back, but I think lenders are going to be very cautious about lending for these new projects over the next little while, coming off a recession, coming off the fact that they've got so many people on mortgage holidays at the moment. So I think finance could be a bit of a challenge too.
That was the next question. What's the likelihood of banks easing their current tight lending practices? And is there pressure on them to do so?
There's definitely pressure on them to do so. I mean, if you look at lending for individuals, obviously there was the Westpac ASIC case out there that was going to go to the High Court. ASIC have stepped away from that. So you would hope that that would mean for individuals that lending becomes a little bit easier. But I think in terms of development finance, it's still going to be a real challenge, particularly while banks have got all these people on mortgage holidays. I think there's going to be a really real reluctance from them to go and throw money at developers to go and build more stuff while they've got all this risk of people potentially defaulting on one hand. So maybe once those mortgage holidays are over, then lending will ease off a little bit. But I just think there's going to be a bit of caution around for a while.
Yeah. What will be the impact to the land estate and off the plan apartment market off the back of the stage 4 restrictions, I guess, in the short term?
I mean, we've already seen it, that it's very hard to transact a property at the moment. So I think that, again, it'll be interesting to see what the August data looks like. I think inquiry for land estates is still going to be quite strong. But obviously actually getting those transactions to come through the system, we won't be seeing for a little while. I've got my theory that the more time you spend in your home, the more things you find wrong with your home. So I honestly think, in the other states, we are seeing the impact of that. People have, when you go to work 5 days a week and you're only at home 2 days a week, these things don't bother you too much. But when you've been cooped up at home for 6 months, those little irritants about your home become unbearable. And I think that is actually going to drive people to want to move, to go and build their own home somewhere else. But again, I think given what's happened with COVID, that's probably going to be more stimulatory for the house and land sector as opposed to the apartment sector. The apartment sector is going to be an interesting one because I feel like there is the potential there for maybe reduced demand. People being locked in their homes for 6 weeks realise that it is nice to have a bit of a backyard. It's maybe nice to have a pool in the property. It's nice to be close to the parks, and maybe there is a little bit of a turn away from this high density living.
Yeah, for sure. I definitely need a home gym at my house. Otherwise, I'm going to need some elastic waisted suits as I return to work. With the withdrawal of international immigrants due to COVID, will this have a long-lasting impact on the local housing demand? Will there be an oversupply? And where do you see the long-term trend of supply versus demand for housing?
I mean, definitely, I feel like there's a bit of an oversupply in the market at the moment. Again, probably more so the apartment sector. I think one thing that we know is going to happen, I mean, look at what's happened historically, is once the borders, international borders open up again, I think the government's going to be very keen to increase the level of overseas migration to Australia. I mean, the tech community is already talking about shortages in tech and looking at ways to get more Australians studying tech, but again, that's going to take a while to ramp up. I also think, generally speaking, Australia's been pretty successful at managing COVID. I think borders have been shut down pretty well. If you're living in Europe, that didn't happen. Obviously, we've got free public health, which if you're living in the US, you don't have that. So I think there's quite a few things that are going to make Australia more attractive. Then you've got other side issues like what's happening in Hong Kong. So you probably start seeing more expats and Hong Kong nationals wanting to move out of China as well. So I think that there is going to be a large swathe of migration to Australia once the borders open back up again. I guess the $100 million question is, when's that going to happen? I'm probably a bit surprised that there's not more pressure from the universities, or they haven't been successful, and from businesses at arguing that people migrating to Australia or coming to study for Australia for 2 or 3 years can't be allowed back in, because realistically, what's a 14-day quarantine if you're going to stay here for the next 2 to 3 years, or if you're planning to stay here forever? So it'll be interesting to see maybe towards the end of the year, particularly as Victoria hopefully comes under control, if there's actually a bit more pressure, or we start to see some of that happening rolling into 2021.
Fantastic. What's your opinion on the best case scenario for the off the plan properties for the next 6 to 9 months?
Best case scenario, I think, is that just we start to see demand coming back as things open up. And I think the best case scenario is ultimately that we don't see too many settlement fallovers, and the actual supply of new developments actually continues to moderate, and that creates a bit of shortages. And then over the next few years, there's a bit more of a case to start building, particularly again once those borders start opening again.
Yep. And where do you see the property market in Australia heading? Do you think the government will take appropriate steps to make the industry better in 2021?
I think they will. I mean, the reality is the property sector has a pretty strong lobby group between the Property Council, UDIA, Master Builders Association, Housing Industry Association. There's obviously a lot of jobs tied to property, but it also has a really strong multiplier effect throughout the community. So I think it makes sense, announce home builder, see how that goes, and then have something else up your pocket for once home builders over. So I think there will be more stimulus. Look, I was always of the opinion that some of the doomsday predictions about what was going to happen with prices were probably overdone, given how low the cost of borrowing is. But of course, we are in a recession. I mean, anyone basically under the age of about 50 has never worked in a recession here in Australia, because they were still at school last time there was a recession in 1990. But I think it's very different. And I think, sure, some people are going to be challenged. Some people are probably going to have to sell their homes. But other people that are still employed are very restricted in how they can spend. They can't go on those overseas holidays. They can't do all the things that they used to do. And that's probably going to feed them into, let's upgrade our house, let's move somewhere nicer, especially because the borrowing costs are very low.
Yeah. That's it for the questions for now. So thanks everyone for those questions. As I said earlier, please reach out to your account managers if you need any help with some data or insights. And thanks everyone today for joining us. And thanks Cameron for that market update. We'll see you all again soon.
Thanks everyone.
Thanks.
I see the moon, I see the moon, I see the moon. Oh, when you're looking at the sun.